Just 5 financial statistics are needed to reveal how financially well off someone is. It's their income, their savings, their investments, their retirement balance, and their debt. Add them up and you get a clear picture of where you really stand. In this video, I'll walk you through all 5 statistics for the average Kiwi and show where you stack up. Our first statistic is incomes. We can split this into 2 by looking at individual income and that of a Kiwi household. The best place to get this data is from Stats NZ, the government's data collection arm. Every 3 months, they survey 15,000 households, with every person 15 years or older living in those houses required to answer the survey truthfully as a legal requirement. Starting with individual incomes, Stats NZ reported that last year the median Kiwi worker earned $1,343 a week before tax. Per hour, it comes to roughly $33.56, and per year, that's around $70,000. This includes all earnings from wages and salaries, so it doesn't include non-work income like the benefit, pension, dividends, that kind of thing. This is strictly the median or middle person's income from paid employment only. So 50% of people earn more than $70,000 a year and 50% earn less than this. This data is further broken down by age. Median weekly earnings increases through the ages until the late 40s, then starts to drop off. At this age, many people start to make lifestyle choices like working less hours, making more time for family, or retiring. So $70,000 is what the median New Zealand worker earns per year. When we look at households, it captures data on the total income earned by a group of people living under a single roof. Perhaps you have a couple and both of them work. One of them works, or there could be adult children living at home with 3 or more workers earning an income. All of this is captured when we look at household income data. Last year, the average Kiwi household earned $134,599 a year before tax. However, this figure captures all income sources, not just those from paid employment like we saw before. So when we look at paid employment alone, the average comes to a little over $90,000. These numbers are averages, however, which doesn't give us a fair view of what the middle Kiwi household earns. The Ministry of Business, Innovation and Employment, or MB, gives us a bit more to work with. Last year, the median New Zealand household earned $122,500 a year before tax. This figure includes all income sourced from paid employment, self-employment, and government transfer payments. So if your household earns more than this, it's in the top half of New Zealand, and below this, the bottom half. Depending on where you live, the median income can differ as well. Wellington tops the table at almost $150,000 a year, with Auckland and Hawke's Bay not far behind, each sitting above the national median. As we look through the other regions, the Bay of Plenty, Canterbury, Northland and Waikato all sit around the $110,000 and $120,000 mark. Right down at the bottom of the list, we have the West Coast at $96,000. So those living in Auckland and Wellington tend to earn more than those living in smaller cities or the regions. So to bring all these numbers together, if you personally earn $70,000 a year and all the income earners in your house earn about $120,000 a year, you'd be about mid-pack across New Zealand. Now before we talk about savings, let me tell you about today's video sponsor, Moomoo. They're a global investment app with a market-leading presence in 5 other markets including Australia, and now they've come to New Zealand. With over 26 million users and $100 billion in assets, Moomoo offers Kiwi investors more than 26,000 stocks and ETFs across the US, Australian and Hong Kong markets. On US stocks and ETFs, Moomoo users get access to 24-hour trading on weekdays, low commission fees of 99 cents per trade, and even level 2 market data refreshing 30 times a second, giving you an edge by seeing trades happen in real time. All of this combined with over 100 technical indicators, 45 charting tools, and a significant research-heavy back-end to find insights other investors might miss. Their parent company, Futu Holdings, is listed on the Nasdaq exchange, worth over $11 billion at the time this video was made. They're also locally registered with the Financial Service Providers Register here in New Zealand. So when you invest with Moomoo, you're investing with an established player with a global presence and execute annual trades nearing $1 trillion a year. If you want to get started with Moomoo, make sure to use my link down below in the video description. To celebrate their launch in New Zealand, they're offering zero commission trading on US and Australian stocks for the first 30 days, and up to 12 free stocks for the qualifying deposit. Now let's take a look at the average Kiwi savings. When we talk about savings, we aren't referring to broad asset classes. We're simply talking about cash in the bank. For many people, they have a single account where their incomes go and expenses are paid out of. Others, on the other hand, might have separate accounts where they store their emergency funds, stash away money for goals, like a house deposit, a holiday, that kind of thing, or regular expense buckets, like the barefoot investor. Unfortunately, in New Zealand, there isn't a good body of data on savings to report on. Instead, we have some headline statistics from KiwiBank that show whether your behaviours around saving are better or worse than your average Kiwi. Their research found that a whopping 30% of Kiwis would need to borrow money if they got an unexpected $500 bill. Even more worrying is that 37% of respondents don't have money set aside for unexpected expenses. And this is despite 34% of respondents saying they have at least one unexpected expense a month. So roughly a third of the population don't have money set aside for something that almost happens once a month. So it's really no surprise when you consider that 63% of Kiwis struggle to put money aside for savings, largely owing to the high cost of living. Having an emergency fund or just money you can tap into is absolutely essential for your financial security. So statistics like this are troubling. Traditional personal finance recommends having at least 3 months of living expenses saved away in an emergency fund. So if your essential costs like rent, groceries, that kind of thing comes to $3,000 a month, then you should have $9,000 stashed away in an emergency fund. So if you have savings or an emergency fund that exceeds 3 months of essential costs, you're well ahead of where most Kiwis sit in the savings space. If, on the other hand, you have $500 or less in a savings account, you'd be in the bottom 30% of Kiwis, according to the KiwiBank survey. So with a pretty dismal view of savings, let's take a look at another massive store of wealth for Kiwis, and that is investments and property. Shockingly, there isn't a whole lot of data in New Zealand around Kiwi investing patterns. As a proxy, we can use some numbers from Sharesies to get an approximate figure. Back in 2021, Sharesies reported their users had an average balance of $4,000. Since then, we've seen a massive bull run and a doubling in their user numbers to around 800,000. According to an article in April this year, Sharesies currently manages over $8 billion across all users. Morningstar reported as of March, Sharesies manages $283 million in KiwiSaver assets. So once we remove that and divide by the user base, we get an average balance of stocks, shares, and cash in the platform of about $10,000. This, of course, is a very rough calculation. People, of course, invest in more than just stocks, and even within stocks, you have multiple platforms, and Sharesies is generally targeted towards beginner investors. They would generally have smaller balances. However, it does give us a rough indication of how much money hundreds of thousands of Kiwis have invested in the stock market. Though it's slightly older data, back in 2021, the FMA ran a survey and found 21% of Kiwis held shares and 13% owned funds, which tend to be stocks heavy. These numbers will be much higher now, so if you have a stock market account, have bought a few shares, and have a balance exceeding $10,000, it's likely you're in the top half of Kiwi investors. But the much larger investment we all make is, of course, property. With the average house price exceeding $900,000, there is a hell of a lot of New Zealand's wealth tied up in property. Queenstown, Auckland, the Coromandel, and Tauranga all top $1 million, while the likes of Bulla, Waitomo, and Ruapehu all have averages below $400,000. According to Stats NZ, roughly 2/3 of Kiwi households own their own home. Of those, 1/3 are mortgage-free. So roughly 22% of New Zealand live in a mortgage-free home. If you're in that group, you're likely to be financially well off, as not only do you have a freehold asset worth an average $900,000, but you'll have much lower housing costs to take care of. With the money saved, you can grow all the other things we're talking about in this video, like savings, investments, or other property assets. Beyond just the house that you live in, the FMA found that roughly 11% of Kiwi adults own at least one investment property. Stuff observed a similar 14% back in 2021. So many Kiwis own not just the home they live in, but have managed to recycle that equity into acquiring others too, like rentals or perhaps a batch. So if you own a home, you're in the top 66% of Kiwis from a property standpoint. If it's debt-free, top 22%. And if you own multiple properties, that's a level only 1 in 9 New Zealand adults will reach. There will be others that prioritise investing in other asset classes, but given their lack of adoption relative to housing in this country, the rates aren't likely to be high. When we talk about property, we also need to talk about debt. It's a major financial topic many don't like to talk about, but it's important to consider when we look at the finances of the average Kiwi. Canstar reports the average Kiwi in 2024 has a mortgage of $376,000. or $554,000 for first-home buyers. A 30-year loan on your average Kiwi home at a rate of 5% would set you back over $2,000 a month. So debt heavily reduces your ability to invest, to save, or grow your investment base outside of property. Looking at the average levels of debt, Kiwi households are among the most indebted anywhere in the world. To boost your financial position, use debt efficiently to build your appreciating asset base. And finally, the last measure of a Kiwi's financial position is their retirement account, KiwiSaver. It isn't compulsory, but for many people, they've saved a lot more as a result of it. I, for example, used it to buy my first home back in 2022. There have been a few changes with KiwiSaver recently, but if your employer matches your contributions, you might not be as affected as the media might make it sound. Earlier this year, the Retirement Commission found the average KiwiSaver balance was around $37,000. Here you can see their breakdown by age, showing those in their 20s have 10 to 20 grand on average, 30s 20 to 30 grand, and 40s between 30 and 50 grand. So if you have a greater balance than the average for your age, you're of course doing better than average. So in summary, if you own a home, have minimal to no debt, have savings that would cover at least a month of expenses, KiwiSaver that exceeds the average for your age, and you've started investing, you're doing extremely well. Everyone's financial starting point is different. Some people inherit money, others have a rougher start to life, but no matter where you start, the most important thing is getting the basics right. Save money, invest it in assets that appreciate in value, use debt responsibly, and you'll be miles ahead of most Kiwis. If you want to give Moomoo a try, make sure to use my link down below to get up to 12 free stocks when you make a qualifying deposit. Also make sure to hit the subscribe button if you want to see more content just like this and join 22,000 other Kiwis and Aussies looking to improve their finances. Thanks for watching, and I look forward to catching you on the next one. Cheers.